Well, a little bit of breaking news. We just jumped about 20 points at the moment on the Dow Jones Industrials. We're now up 81, the S&P up 6. Let's bring in Bob Dahl, who is one of the best in the business when it comes to anticipating the best ways to invest. He's over at Nuveen. He himself at Nuveen handles $2 billion in assets under management. Bob, everybody's waiting on the Fed's meeting next week. It's September 16th, the announcement on the 17th. What do you think is going to happen about rates?
My guess is the Fed will finally do it, but that's not with high confidence. We've heard, Liz, all kinds of back and forth. If markets are rioting next week, they won't go. If this was just about the United States, it'd be a foregone conclusion. It's the nonsense out the U.S. That is keeping us a little bit on our seats. They need to get moving. Remember, rates are zero. That constitutes an emergency that long since passed. It's time for the normalization process to get started.
I agree with you. I do. But I think what you just said, folks, is something we haven't heard from any of our pundits this week. And that's that Bob is saying, watch, if the markets are too volatile next week, the Fed may very well hold. Putting that aside, Bob, how are you telling clients to invest?
We think that we are in a healing process, Liz. Look, that the decline we had of 12.5% so quickly in the month of August did some damage. And like an athlete that pulls a muscle, you got to get off the field for a while, heal, and then come back onto the field. So I think we're going to bounce around. There are going to be some periods that look great, and then we're going to have setbacks. The answer to the question, which way do we break out, will depend on the fundamentals. And my view, led by the U.S. consumer, the U.S. is going to have some better earnings and will eventually move upside, but that take some time.
Okay. Well, Bob, I know you're a man who likes to invest even when times are tough, so it's great to have you. Thank you so much. It's good to see you.